Welcome back. In our top business story, a new European Union tax aimed at reducing airlines' carbon emissions could cost Abu Dhabi's flagship carrier Etihad Airways up to $719 million over the next 8 years, the company told a local publication. At the start of next year, airlines that land in an EU member country will have their carbon dioxide emissions capped at 97% of their average output levels between 2004 and 2006. And by 95% in 2013. For all emissions above that level, airlines have to pay for a ruling that could cost the Gulf's carriers billions of dollars, because they will have to pay a fine of up to $144 for every ton of carbon dioxide they emit above the limit. Etihad Airways head of environment Lyndon Koppel said in a press report the cost of complying with the European emissions trading scheme could reach $719 million by 2020. Jumeirah Group today opened its first luxury hotel in Europe in the financial city of Frankfurt in Germany. Only a few minutes walk away from the headquarters of the European Central Bank and Germany's largest private bank, Deutsche Bank, the 5-star 25-story high hotel is located in the center of Frankfurt and boasts to have the largest rooms in the city, the Jumeirah Group said. Jumeirah opened several hotels this year all around the world, in Shanghai and the Maldives, as well as the Sabil Sarai resort on the Palm Jumeirah in Dubai. The operator also plans to launch its first hotel in Abu Dhabi in September. Today was again a day of many earnings results being published here in the UAE. The National Bank of Abu Dhabi posted a net profit of just over 1 billion dirhams in the second quarter, up 2.5% from the same period last year. Ras Al Khaimah National Insurance Company posted a net profit of 25% year-on-year to reach 5.2 million dirhams in the second quarter. And Foodco Holding made 4.7 million dirhams in net profits in Q2. Stocks in the UAE rose today after US President Barack Obama said that leaders of both parties in the House and Senate have reached a debt agreement, and also shares in the Gulf region profited as investor sentiment picked up. U.S. congressional leaders have finally reached an 11th-hour deal on the nation's debt issue. President Barack Obama announced late on Sunday, Washington time, that an agreement had been reached to cut the nation's deficit and avoid default. Leaders of both parties in the U.S. House and Senate reached an agreement to raise the debt limit as well as cut the federal deficit by as much as $2.5 trillion over a decade. However, this deal must now be officially voted on. Whilst markets all around the world saw a relief rally on the news, the agreement still needs to pass votes in both houses. Also, a congressional committee will by November decide on further measures to cut the deficit. Also, that is a factor of uncertainty. However, President Barack Obama was relieved a last-minute solution was in the end found.
I want to announce that the leaders of both parties in both chambers have reached an agreement that will reduce the deficit and avoid default, a default that would have had a devastating effect on our economy.
To discuss the impact of the last-minute U.S. debt agreement, we earlier spoke with Gaurav Kashyap, head of GGCX trading at Al Pari Middle East DMCC, and asked him how the markets reacted and what's in for the dollar this week.
What we're taking from this whole thing is that we foresee it to be a good solution for Obama. Of course, he doesn't have to address this issue until his re-election campaign is finished in 2012. The Republicans are also quite happy considering they have no tax raises. But the real issue here is what impact it's going to have on the U.S. Consumers. What we will see today in trading is that we will see equity markets picking up on the news. Treasury prices should increase, and we will see safe havens unwinding. We saw gold dropping about $20 to trade around 1610 levels. The USD CHF has improved in favor of the US dollar, and the USD Japanese yen has also moved higher. So this unwinding should continue, and we should see these pairs grinding higher with gold moving a little bit lower.
Samsung Electronic plans to boost its revenues in Africa fivefold to $10 billion by the year 2015. That's according to a regional executive, as the South Korean enterprise targets rising consumer spending on the fast-growing continent. Samsung's revenues generated in Africa currently stand at $2 billion, or less than 5% of the company's total. Buoyed by a decade of relative stability and annual growth of 7% or more in many sub-Saharan economies, the continent of about 1 billion people is increasingly drawing attention from major multinationals. Samsung is the world's largest maker of televisions and flat-screen panels and the number 2 maker of mobile phones.
A couple of things have happened, I think. I think a lot of the African countries now, because of good governance, good economic conditions, good economic policies, economies which are growing, which obviously leads to a middle class. And obviously with the middle class and the youth, technology is one of the and electronics is an industry which moves.
Before we go, here's a quick overview of the oil and currency markets, and after that, Laura Buckwell is back with the day's sports news.